Hello everyone, welcome back to my channel. In today's video, we are going to understand one of the most important but very confusing topics in ISO 20022 payment messaging, and that is settlement methods. So when we talk about ISO 20022 payments, we often hear message names like PEX 008, PEX 009, PEX 002, and so on. But inside these messages, there is one small field that plays a very big role, a very important role, and that field is called settlement method. In XML format it is written like this. So this field tells bank one very important thing, that is how will the actual money be settled between the financial institutions or between the banks. Today we will understand the four settlement methods, which are INDA, INGA, COVE, and clearing. We will see what each code means, where it appears in the ISO 20022 message, and how it impacts the real payment flow between the banks. So let's start. So before we jump into the settlement methods, let us quickly understand or revise the foundation. ISO 20022 is as you know, is a global financial messaging standard. In simple words, it's a structured way for banks and financial institutions to exchange payment information. ISO 20022 uses your XML-based text, and that means the message can carry more detailed information about the payment, the parties, the banks, remittance details, and most importantly, for today's topic, which is the settlement information. Okay, the settlement information. Now, in ISO 20022, we commonly deal with three types of message families. First is PAIN, which means payment initiation. These messages are generally used between a customer and a bank. For example, when a corporate customer sends some payment instructions to its bank, it may use pay.001. Second is your PEX, which means payments, clearing, and settlement. These are your interbank messages. That means once the payment moves from customer to bank space into bank to bank space, PEX messages come to the picture. This is where settlement method basically becomes very important. And third is your CAMT, cash management. These messages are used for statements, reports, your notifications, reconciliation related information. Now, the basic question is why, when we are talking about the settlement method, why does this settlement method matter? Because settlement method tells every agent in the chain how the payment obligation will actually be settled. For example, will the money be settled using a direct accounting relationship between two banks? Will it go through a clearing system, or will it require a separate cover payment through correspondent banks? So this one field, settlement method, can impact your payment speed, cost, liquidity, reconciliation, operational risk, and even your counterparty risk. So payment instruction tells what needs to be paid, whereas settlement method tells how the bank will settle the money. Now let us see where settlement method actually happens inside the ISO 20022 message. In messages like PEX.008 or PEX.009, settlement method is present inside the group header, which is not which is actually written like this format. The message contains, every payment message contains a group header, as you all know. I am assuming the group header contains, message level information such as your message ID, creation date time, number of transactions, and then finally the settlement information. Now, inside this settlement information, we have some more subfields or sub information. So, settlement information is like a payment settlement instruction section. It tells the receiving system here is how the payment should be settled between the banks. So it has a settlement method, settlement account, clearing system, and so many other items like instructing reimbursement agent, instructor reimbursement agent, third party reimbursement, and so on. So settlement method, um, settlement account basically identifies the account through which the money will be settled. Then this basically identifies a clearing system, and this agents are mainly relevant when the settlement method is your COVE. So whenever you analyze a PEX 008 or PEX 009 message, always look at the group header and then go to the settlement information, and then you go to the settlement method path. So this is where the settlement method lives actually. Now we come to the core concepts. In ISO 20022, the settlement method can have 4 possible values: INDA, INGA, COVE, and clearing. Now each value tells us a different way in which settlement will happen between the instructing agent and the instructed agent. Let us define these two terms first: instructed agent and instructing agent. So instructing agent is nothing but the bank or the financial institution sending the instruction. And instructed agent is the bank or financial institution receiving the instruction. Now INDA means settlement is done via the instructed agent. That means the instructed agent, I mean, in this settlement method, INDA, it uses an account that the instructed agent holds with the instructing agent. In INGA means settlement is done via the instructing agent. Here, the instructing agent uses an account it holds with the instructed agent. Then we have COVE. COVE means the payment is being settled using a separate cover payment, usually through correspondent or reimbursement agents. Then we have clearing. Clearing means settlement happens through a clearing system, such as your RTGS system, chips, Fedware system, chips, target system, and so on. A very simple way to remember is that this INDA and INGA are account relationship based. So these two are account relationship based. Cover is based on the correspondent banking relationship, and this is based on the clearing system. Now let us understand each one in detail. The first settlement method is INDA. So INDA basically stands for your instructed agent. In this method, the instructed agent or the receiving bank settles the payment using an account that it holds with the instructing agent. Let us try to make it simple, or let's try to understand it with simple examples. Imagine a bank. Bank A is the sending bank, and Bank B is the receiving bank. Now, Bank B basically holds an account at an instructing agent. Basically, Bank B holds an account with Bank A. Now, Bank A can settle the payment by using Bank B's account on Bank A's book. I'm repeating it. If Bank B holds an account with Bank A, then Bank A can settle the payment using Bank B's account with Bank A. So from Bank B's perspective, this account may be its nostro account, and from Bank A's perspective, it may be Bank B's postro account. So in INDA, the key point is the instructed agent has the account with the instructing agent. So you can see the payment instruction flowing from the instructing agent to the instructed agent through PEX.008, but the settlement happens using the instructed agent's account held at the instructing agent. Now this method is common in the correspondent banking when the receiving bank already maintains an account with the sending bank. There is no separate clearing system involved here. It's a bilateral settlement arrangement between the two banks. Also, the field settlement account may be used to identify the exact account used for settlement. So just remember, INDA basically means instructed accounts, instructed agent's account is used. Now let us look at the XML example for INDA. So here inside the group header, you can see the settlement information block. There is a settlement information block. Inside the settlement information block, the settlement method is INDA. This is how the settlement method basically is shown or is captured. This tells the receiving system that the settlement will basically happen using the instructed agent's account with the instructing agent. Then we see the settlement account. So this is the settlement account. In the example, it is represented as using an IBAN. So this account identifies the account through which the settlement will be processed. The important point here is that we do not see any reimbursement agent in this XML structure. We also do not see any clearing system code, right? Now why? Because INDA does not need a separate cover payment and does not require settlement through a clearing system. It is based on a direct account relationship between the two agents. So when you see the settlement method as INDA, so you should immediately think the instructed agent's account with the instructing agent is being used for settlement. Okay. Now let us understand the second settlement method, which is INGA. So INGA basically stands for your instructing agent. This is basically the mirror image of INDA that we have just come across. In INGA, the instructing agent, meaning the sending bank, settles. Instructing agent settles using an account it holds with the instructed agent. Let us again take an example of bank A and bank B. Now bank A is the sending bank here and bank B is the receiving bank. So bank A is an instructing agent and bank B is an instructed agent. So if bank A holds an account with bank B, then settlement can happen using bank A's account on bank B's book. So the instructing agent has an account with the instructed agent in case of INGA. This is also a bilateral settlement method. There is no clearing system involved and there is no separate cover payment. The choice between INDA and INGA depends upon which bank holds the settlement account with the other bank. For example, in INDA, instructed agent's account is used, and in INGA, instructing agent's account is used. So both are based on direct relationship, but the direction of the account relationship is different. Let us look at the XML example of INGA. Again, we need to look at the group header, and then we need to go inside the settlement information. Now, inside the settlement information block, we have the settlement method. So here it's INGA. That clearly tells that the instructing agent will settle using the account with the instructed agent. Now in the settlement account section, instead of IBAN, the example uses other, meaning another type of identifier. So there is an account ID, there is a scheme name. So this is important because ISO 20022 is flexible. The settlement account does not always have to be represented only by an IBAN. It can also be represented using another account identifier depending on the system, country, or bank arrangement. The key learning thing from this XML is that your settlement method is INGA. The settlement account belongs to the instructing agent. The account is held at the instructed agent, and the account can be represented using IBAN or another valid account identifier. So when reading the XML, do not only look at the account number, always connect it back to the settlement method. Okay. Now we come to one of the most important settlement methods in cross-border payment, that is COVE. COVE means cover method. So this method is used when the instructing agent and the instructed agent do not have a direct account relationship. So let us understand with a practical example. Suppose a bank in US. Let's assume this is a US bank. Suppose a bank in US needs to send a payment instruction to a bank in Germany. Let's assume this is a bank in Germany. Now, the two banks may be able to exchange payment instructions directly, but they may not maintain accounts with each other. So how will the money actually move? This is where the cover method comes to the picture. In cover method, the payment instruction and the actual movement of funds travel through two different paths. This is part 1, this is part 2. The customer credit instruction, usually PAX.008, goes directly from the instructing agent to the instructed agent. But the actual funds move separately through PAX.009, cover payment, using this reimbursement agents. Or correspondent banks. That is why a curve is often explained as instruction goes one way, money moves through another path. So in this diagram, you can see the instructing agent sends the PAX 008 directly to the instructed agent, and this tells the receiving bank about the customer payment. But the settlement funds move to the instructing a reimbursement agent and instructed reimbursement agent using a PAX 009 cover payment. This is widely used in cross-border corresponding banking, where banks do not have direct account relationship. However, because COVE adds another leg to the payment flow, it can be since it creates this leg to the payment flow, it can be slightly slower and may carry additional operational and settlement risk compared to the previous two that we have studied, INDA and INGA. Okay. Now let us look at an XML example for COVE. So inside your settlement information, you see under the settlement method, you will see the method name COVE. So this tells the system that the funds will move through a separate cover payment. Then we see two important agents: the instructing reimbursement agent. This is the instructing reimbursement agent and the instructed reimbursement agent. So in the example, the instructing reimbursement agent has a big code, and these are the banks. I mean, there's a big code for the instructed reimbursement agent as well. So these are the banks that will participate in the cover settlement leg. So in a longer correspondent chain, there may also be third reimbursement agent or third third reimbursement. So when you see curve in the settlement method, you should immediately check whether the reimbursement agent information is present. So these are the these two fields are very important during cover payment, because COVE is not just a code. It tells us that another payment message, generally PAX or 009, will be used for movement of the funds. Okay, now let us understand the fourth settlement method, which is clearing. So basically, CLRG stands for clearing system. In this method, settlement happens through a clearing system or settlement mechanism. For example, your target 2 in Eurozone, Fed wide in US, chips in the US, CHEPS in the UK, and so on. In clearing, the two banks do not necessarily need to maintain direct accounts with each other. Instead, both banks must be reachable through the same clearing system. The clearing system becomes the settlement mechanism. For example, if both banks are participants in the RTGS system, the payment can be settled through the RTGS system. The key properties of clearing system are, the settlement finality is governed by the clearing system. The settlement finality is governed by clearing system. The banks do not need to, do not need a direct bilateral account relationship, and both agents must be eligible or reachable through the clearing system. Simple way to remember clearing is that the clearing system sits between two banks, instructing and instructed, and provides a settlement mechanism. Let us look at an XML example of clearing. So again, here you see the settlement information. Inside this settlement information, we see the settlement method showing a clearing as a value. This means the settlement will happen through a clearing system. Then we will have this field as well, or this tag as well. And inside this tag, there's a call called TGT, target. So this code basically identifies the clearing system. In this example, TGT means target, your target system in Eurozone. This also shows some common clearing system codes, like TGT means target 2, FDW means Fed wire, CHP means chips, and CHEPS is CHEPS of UK. The important point here is that for clearing, we usually do not need a settlement account or reimbursement agent details in the same way that we have that we did for INDA, INGA, or COVE. Why? Because the clearing system handles the settlement according to their own rules. So when you see settlement method as clearing, you should look for clearing system. That tells you which clearing system is being used. Now we move to a full end-to-end example. So this slide basically shows a PAX.008, which is the FI to FI customer credit transfer message. This is used when one financial institution sends a customer credit transfer instruction to another financial institution. Here, the customer payment is from your ECME Trading Limited to Master GmbH. So there is a debtor and there is a creditor, sender, receiver. The interbank settlement amount is 250,000 USD. So you can see the amount being sent by the sender is 250,000 USD. Now you focus on the group header. So this is the group header part. Inside the group header, we have the message ID, we have the creation date time of this instruction, then how many transactions involved, and most importantly, our settlement information. Inside settlement information, you see the settlement method is COVE. It involves cover. That means this PAX 008 is carrying the customer payment instruction, but actual funds will move through a separate cover payment. Then we see the reimbursement agents. We see the instructing reimbursement agent and the instructor reimbursement agents, which are identified by the big code. Now inside the transaction information block, so this is the transaction information block. You see end-to-end ID. This is important because it helps track the payment from the original debtor to the final creditor. We also see the debtor name, which we have already discussed, the debtor agent, there is a debtor's bank, the creditor agent, there is a creditor's bank, and so on. So this specs .008 message tells the creditor bank that see, here is the customer payment instruction. The fund will be covered separately using a cover method. Now this slide shows the second part of the cover flow. There is a text.009 cover payment. Right. This is a message that usually moves the fund between the financial institution. The message type is your text.009 financial institution credit transfer. In the group header, you again see in a group header we have the settlement information. So, but notice something very interesting. In the text.008 in the previous slide, the settlement method was COVE, but in this particular XML sample, the settlement method is clearing, and the clearing code is FDW. This means the original customer instruction used cover, but the cover funds are being settled through your Fedwire clearing system. So this is very important for you to understand. A cover customer payment may trigger a PEX.009 cover payment, and that cover payment can itself settle using another method, say clearing. Now notice the connection between the two messages, the end-to-end ID. You see, this is the end-to-end ID for this PEX.009, and if I take you to the previous slide, this is the end-to-end ID. So these two. This ID is same in both PEX.008 and PEX.009. This ties the PEX.009 cover payment back to the original PEX.008 customer payment. Also, the PEX.009 contains the underlying customer credit transfer. Here it's an underlying customer credit transfer. This helps the receiving bank match the cover funds with the original customer instruction. And that is how the ISO 20022 supports transparency and traceability in cross-border payments. Okay, now this slide gives us a side-by-side comparison between all the four settlement methods. Let us summarize them one by one. INDA. The INDA means the settlement uses the instructed agent's account at the instructing agent. It is a bilateral based on a direct nostro-fostro relationship, and it's generally faster with low settlement risk. INDA means the settlement uses the instructing agent's account at the instructed agent. This is also a bilateral relationship and generally faster because the account relationship already exists and also involves low settlement risk. Cover means your settlement happens through a separate cover payment using reimbursement agents. This is common in your cross-border payments where the two banks do not have a direct account relationship. It may be slower than the first two and can involve additional operational and counterparty risk. Then the fourth is clearing. That means settlement happens through a clearing system. This is common in mostly the domestic or regional clearing and settlement systems such as RTGS or HCH system. It can be fast, but it depends upon the clearing system's rules, operating hours, memberships, and settlement mechanism. So all four values appear in the same field. So this four code, INDA, INGA, COVE, all four values basically appear in the same field. That's the settlement method. But based on that one value, the payment processing system may follow a completely different path. That is why settlement method is so important for professionals like business analysts, payment operations teams, testers, developers, and anyone working on ISO 20022 payment systems. Now let us understand the supporting elements inside the settlement information. Now settlement method alone settlement method alone tells us the method only, but the settlement supporting elements provide the actual details needed to route, settle, and reconcile the payment. First is your settlement account. So this identifies the specific account used for settlement. It may be your IBAN or another account identifier. This is most relevant for INGA and INDA. Second is your clearing system. So this identifies the clearing system used for settlement. It becomes important when the settlement method is your clearing. Third is your instructing reimbursement agent. This is used with the cover method. It identifies the agent through which the instructing agent will arrange reimbursement. Then fourth is your instructed reimbursement agent. This identifies the agent through which the instructed agent will receive or claim reimbursement. Then fifth is your third reimbursement agent. This is optional and may be used in longer correspondent banking chains. And finally, we have the settlement time indication. This can provide optional debit or credit during timing information. This provides optional debit or credit timing information for the settlement leg. So do not just read the settlement method in isolation. Always check the supporting elements which we have discussed. These 6 supporting elements at least, because this tell you the complete settlement story. Okay, now let us understand which ISO 20022 messages carry the settlement method. The first and most important message is your text.008. Text.008 is used for FI to FI customer credit transfer. It carries a settlement method for the interbank leg of a customer payment. Then in the text.009, it is used for bank-to-bank payments and also for the cover leg of cover payments. Third is text.004. So this is the payment return message basically. If funds are being returned, the return payment also needs settlement information, because the return funds must also move between the agents. Then the fourth is PAX.010. PAX.010 is used for financial institution direct debit. It can also carry settlement method information for financial institution level collection flows. One important clarification: customer initiation messages like PAIN.001 do not usually carry settlement method directly, because PAIN.001 is used between the customer and the bank. At that stage, the customer is simply instructing the bank to make the payment. The actual interbank settlement decision happens once the payment enters the PAX message space. Okay. And with this, we come to the end of this video. I hope you found this explanation useful. If yes, please do like the video. Share it with someone who is learning ISO 20022, and please do subscribe to my channel for more practical banking and payment videos in the upcoming days. Thank you for watching. I will see you in the next video.